Welcome, it's the Crypto Sniper. I just want to follow up a live stream with a technical chat because we didn't get to show the charts, so it's a little bit of a follow-up. There's a couple of things additional to put in that didn't come through on the live stream that is a value share, and I'd like you guys to just bear in mind. A couple of things. So we said on price behavior, we don't like chasing a grind too much. Now, I want you to notice something. So this is a little bit subsequent the move. I want you just to notice something that's happening on this wick here. This is the daily wick. What you'll notice actually is that a large part of the move now that had a bit of a blow off and a bit of a retail chase has now been given up. She went to 38. The low area, let's just grab the low. So we're checking the bandwidth here, we're measuring. The low of the daily candle was, look with me up top here, here's their numbers, yep, 75. So this is the lows and the highs. Let's just make sure everybody knows where to find that. Sometimes people are confused. In that box there, the low obviously there and the high obviously there. So we're interested in those 2 points. So back to the cursor that will give us that information. We're just on this candle. Low 35,534. High virtually 38, 37,972. Yeah. So basically I've put those in there. What's actually happened here is you've got a give back of quite a substantial amount. So you've actually given back more than probably 2/3 and held a third of that move. So that is what I would describe as a bit of a fizzle event. And if you go back to not the live stream that we've just done, but I did mention it in the live stream as well, is that when you're on the lower time frames, you've got to be cautious of what we refer to as the upward grind. It's not something at a price behavior level. You would have heard me say words to the effect of, and I'm paraphrasing now, it's not something in terms of a grind that I feel comfortable for chasing to the upside. And the reason we say that is the following. So there's a little bit of a lesson that's becoming more clear as what's happening is happening. Is you've just had a really strong moment. So back on the ETF, get the daily and get the ETF major bullishness back in frame. You've had a run from there to there. So that's a very strong bull pole. So the momentum is overwhelmingly up. It's a pole. It's virtually more up than sideways. You're largely going up. Then what happens is you lose some of that momentum, but you're still going up. And this is what we refer to as the grind. So you're in a channel grind. Now what's actually happening on this time frame, we're on the daily now, it's actually getting worse. Because you would have had people who FOMO'd in, and invariably if you retail and you FOMO'd in, you FOMO'd in from the 37 to the 38,000 mark, and you're now wearing a 35,800. You're wearing a 1,200 pullback or a $2,000 pullback, and this then has the potential to turn into a shooting star. So one of the reasons why we don't over chase upward grinds, particularly after poles, you're accelerating. This is Porsche Turbo first gear. You can barely touch the dashboard. Flawed accelerator, drop the clutch. 0 to 100, 2.7 seconds. Awesome, awesome, awesome. Getting whiplash, neck is stiff. You don't accelerate like that between third and fourth. And then eventually you're getting to the top gear. The acceleration is not the same. You are going higher in speed, but the rate of acceleration is turning until eventually you have blow off, and then you start to become in a situation where it's a blow off environment and you end up with a shooting star like this. That is a precursor to a correction that will see you more likely to be on the downside. So you've got to watch that. So when you get a shooting star like this, this is actually a slightly blow-off exhaustive effect. So the surge and the bullishness at these levels are now running into something a little bit harder, and there's more resistance, there's more tendency to take profits. Some people have now made money. They've been getting in earlier in here, and they maybe got quite big, and they've actually made some good money. And as a result, there's a greater tendency. The more people who are in profit, the more tendency it's about defending. And those are often big hands that get early information. It's not your everyday retail guy. So the everyday retail guy is chasing the pump as this thinks, oh, it's just further upside. Now, we said that this is a bull market and it will continue to go up, but we also said in previous views when looking at this that you can have a correction first before you go there. Before you get to the 40, you can have a correction, and generally our suspicion is on grinds is that we expect there's a probability, and we expect that probability to be slightly higher, that actually you have a break of the basing ascending grind line along the bottom, the doubled up line I just drew. But you can sometimes have exactly what's happening out here, a pop out the top first, which is blow off, it exhausts, it's a precursor to something slightly corrective. That's not the end of the bull market, it's not the death, but the point of the matter is there's also some pain out there, and things aren't going to go up in a straight line. And so you're going to have something, you could come back all the way even to, I'm not going to throw anything out, there's no targets there, but you could come back up here and then work your way back up again, and then we could wind up, and then it could take all of November to play out, and then you break to the upside again. So those things can happen. So there's that as number one, which is why we wouldn't chase into this without it at these levels on a little bit of a move of Bitcoin. Then there's a couple of other things. I spoke about the key seminal levels that are really, really important on Bitcoin were you to go up higher, which I think in the long run will happen anyway in due course. But you might have that pullback and that dip and various other things to happen in between. So one of those key levels was the 40K. So this is the target, this right here. And I'm jumping between my different Bitcoin charts. I'm going to make that a solid line and reduce it. So you had this target made to the downside. That was the 69K. So a little bit of a reminder for people that might be new to our channel. We called that head and shoulder, and that flag there as your right shoulder, and there was your armpit 2 and your armpit 1, and that neckline was the 42.5. That neckline was the 42.5 neckline, and you will note you also had a very strong flag there, and it's almost a diagonal there. The actual diagonal is closer to being through here, which is very close to our target. So you've got a number of historical areas by price behavior that have been seminally interesting. And typically you're going to run into a bit of slowdown. So the takeout of the 40.5, you can see we've got 44.88. It'll vary. This is a Binance platform. It'll be minorly different on a different one. And then you've also got the 42.5 zone. So if you have some real momentum, sometimes you can break both and blow off and then pull back doubly, because you've run two key levels of significance, the 40.5, the 44.88, and the 42.5, which was the 1-2 armpit level, which gave you rise to the 69 high as head, which actually gave you the bottom call. That is an unbelievable bottom call, by the way. Just to be clear, you're within $800 of the bottom. 16,290 and you traded 15,580. I mean, that's an unbelievable bottom call. It is. And I've yet to see anyone else technically that actually has that head and shoulder on there. And they won't have that target because they don't know how we target. And that you all learn, by the way, in our complex head and shoulder and targeting thereof in the first link in the description below. Click that link and see how and why we do it. Watch us implement it and start doing it for yourself in real live trading in situations in the markets, on crypto tokens and other markets for that matter as well. So anyway, so to just reaffirm from the live stream, and if you didn't watch the live stream, then this is fine. You'll get the charts as well here. The key levels for Bitcoin, assuming they don't give back too much here, is going to be the next one, 40.5 and 42.5. Now that's two levels that I've given you. 40.5, call it 44.80, call it 40.5 for a small shorthand, 42.5, which is 2K more, And then I set another level, which I want to make everybody aware of, and that is the 47.5. Hold on, 47.5. So I've got it in dashed blue here so that you don't get the two confused. So before the 69K head and shoulder. So again, let's just redraw that one for you. Before that one happened, and you need to see it on lower time frames to appreciate that particular call. Before that happened, we actually had lower time frame on the 64K high, a similar head and shoulder. There, 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 and there. And we get him down, and he comes through and he's there. And that, it was actually lower than that. It came back to about 39,000. So it did the 29,000, my apologies, 30K. And then you went into the falling wedge that you broke back up out of. And we called that up because you had so many wicks on the candle showing that there were still people happy to accumulate wicks on the candles, real hammer there. And you traded, and then you went to look one way, go the other way candle. That is such a bullish candle. Such a bullish candle, because you've smashed back to your open and beyond and given quite a big body and added it. So not only were you tested down, you rejected it entirely back to where you were, and then went way beyond where you were on a further upside move. So that is why we got bull there, and you actually made a new high there. And then this key level is super interesting because it's the diagonal through the flag, and that literally is your target there of 40.5. 42.5 is the second head and shoulder, that fine fella, and the 47.5, which gave you your 29 and a bit target to the downside. Remember, this is log scaled here, was your first head and shoulder. So head and shoulder 1 and head and shoulder 2, and those gave you necklines. These aren't the targets. That target was down to here, 29.30, which is another reason, by the way. So we're covering all of these key levels. I'm on a chart that hasn't got so many levels, but it's another reason why this 29.30K was such a lid. You ran into it, you got resisted down. You ran into it, you got resisted down. It took your third time through coming up to break it. So you ignore these key levels at your absolute peril. So there you go. 42 is 2K higher. 47 is 5K higher. These are going to be heavy levels. You saw how, and for those that doubt our key levels of significance theory and why it takes a bit of effort. Now, you could get so much momentum at some point that you smash through all three and then have a lengthy down leg, or you could do them one at a time with a moderate pullback, or you could do two and a semi-lengthy. You know, I can't answer what degree they are, but these are your levels on the way back up on the basis that we are in that bull market, that recovery bull. You also need to know that, you know, you don't go up in straight lines. You had those two ones, and I showed you that, you know, you're getting a little bit of pushback. That might reverse and might go even higher later. That's fine. But don't chase into bad price behavior, grinding price behavior after you've already moved strongly with leverage, and be shocked if you get fizzled on. Because a fizzle is, you know, fluffy move, and then suddenly the profit takers come in. So there's still people that will take off at these levels. So head and shoulder 1, head and shoulder 2, 47.5, 42.5, and 40.5. That again, 40.5, 2K more, 42.5, 5K more, 47.5. Key levels of significance. Performing major head and shoulders that took Bitcoin right the way down from its 64, broke at 47.5, went all the way down to 29, performed, reversed back up, went all the way to 69, came all the way back down to 42.5, and dropped you all the way to 16. And in fact, you traded at $800 below that, but literally called the bottom. You cannot ignore the pattern structures and the key levels of significance that are generated by such big time frame patterns that are performers. This is part of HVF method. It is part of our rules. You will learn about it. Click the first link in the description below to become part of it, learn and practically with us as we implement this, why this is important in terms of your up leg. And as I've shown, with the 29K target, which was generated from that head and shoulder, which is no longer drawn on there. I've tried to declutter the chart a little bit. This is a different draw. I'm using a different one, but there's a level there. That is part and parcel why also, so let's just clean our face a little bit and change color. That is part and parcel why you struggled for a while at these key levels. This was a huge falling wedge and target from that structure. So we're going back to, this is when it no longer became quite so easy for Bitcoin. This was your runaway bull, the second most important HVF of them all on a really low time frame. We call it there. From the first cup gold nugget, you can still see the funnel there. You had broken, you had a little comeback with revisit. This was your best part of your bull market, guys. The truth be told, that's the only time you wanted to be any form of leverage in it. You got a second stage run. If you're on a very short time where you could have got away with that, but you had a real pullback post that. By the way, that then ended up becoming your 42.5, where you had your breath just before. Then you had to smash it. You went over the 47, you pulled back. You went a little bit higher, you got your 64, then you pull back. Look at those two interactions with a 47.5. Right shoulder smashed. That was your break all the way back down, 47.5 down to 29. That was a key moment, and you got the exact same here. Key moment. This was a huge performance all the way, called the low in Bitcoin. So those are key levels. So that key level runs through here, and that's why you wound up a little bit there. Now the interesting part is, if I'd spent a little bit more time looking at the total, instead of the risk of the head and shoulder, I would have been focused more on the descending shot here, the descending triangle that you got here, which has a higher likelihood of upside breaks. Again, where was the key level? 1 trillion. Key levels of significance, 1 trillion. Squeezy, Japanesey right there. Up, down, little bounce, and you broke. And that was it. Up you go. Now you can do targets and draw for that if you know HVF method. We'll do that in the group. And you can become part of our community, book and have a chat in the call below. But that is what, those are the key levels for Bitcoin. So what happened on dominance? I want to highlight, if you go back and you've been watching our channel, we highlighted exactly what we felt was going on with dominance. And we called for this orange box to be broken and said this was a really significant break. We highlighted multiple times where you were resisted here, and we pointed out, okay, you're going to rest and pause here, but are you going further? And this was all in and around this key level. The blue mark, by the way, is 50. That's blue there. The 44.16, you're in here, and we were saying that, is it, no, hold on, I think, let me just get the exact number. I'm talking nonsense. It's not 44, I think it was 48. 47.5 was this box. There you go, 47.5 was the box we were highlighting. Always knocked down here. And the next bull market we said will come when Bitcoin leads. Bitcoin is God market. So I'm not a maxi, but the dominance must truly turn. And Bitcoin starts as the major guy who starts the race. He may not win the marathon, but he's the first, he's one of the pros. He starts out the blocks, his pace car number 1. Out he goes. So you see the sell-off there, the sell-off there, the sell-off there, the sell-off there. We got up to here, and you're now squeezing, and we said, you're going to take the 50%. Of course, before you run such a critical level, such as 50%, the big fat blue line, that's the number 50%. You can see it. You need to wind up a little bit because it's a wall. You've got to run and jump over it. So you're winding up, taking a run, getting enough pace, and you're clearing it. That's why you overshoot it in the first instance, and then you pull back. We did what we call a broadening structure. This is a slide. The minute you break that, you're going back up again. This is expected continuation. What did you get? Further upside continuation, driven by Bitcoin dominance that actually went to 54.5, almost 55%. Now you're at around about 53%. So this has been a leading. Honey Badger leads, and it is your God market. This is what permissions everything else. So for me, this now is a continuation. The Bitcoin bull is probably fairly safe, But it doesn't mean it's going to be all easy for you. Watch that fizzle. That's why we didn't chase in on the grinding up. I said not chasing in. We don't like that. You might get a fizzle. Once you fizzle to the upside, you've got an almost very high probability to suspect some degree of pullback. How far? If I don't have a pattern, I can't guess any better than you. No pattern structures. Maybe on a lower time frame, I'll get a pattern. I'll be able to have a view. I'll be sharing it with the community, and we'll try to see if that comes about. Without any patterns, my guess is no better than yours, and you're welcome to guess. So dominance here, having a small pull, but if it does pull back, what tends to happen is Bitcoin pulls back less in percentage terms than the alts that kind of got a bit excited and a little bit pumpermental. So what you will probably get in many instances is bigger pullbacks on the alts. So you might actually get a little bit of Bitcoin dominance, like a rally like this. It doesn't have to be, woo, that's a bearish Bitcoin dominance because it's now drifting off and the others are having a fairly reasonable bedwetting session. Nothing too dramatic, but a fairly reasonable. So what you tend to go is you could go higher on that, or you could just rally without going higher on it. So watch out for that as potential. We've discussed today the key levels on Bitcoin. I've also mentioned in the update, that was a live stream, that within that Ethereum has been unnoticed and it's a bit flying under the radar, and we discussed it on the ETH dominance that Ethereum can't be ignored. It is almost certainly status like the rest of them. It's not calling it a good thing or a bad thing, but we felt that this down leg that Ethereum was putting in would reverse. And this could see a very strong period coming in for ETH. We felt we were trying to pick the bottom there. And I'd suggest to you now that certainly on ETH dominance, you've just had a lower wick there, which is showing bid up. And then this is a huge rejection ETH dominance. So Ethereum's gone up probably more than some of the other alts on average, given its market cap size, and is giving back less of it on that fizzle. So that is a significant candle. You've only had very few other greens on the weekly time frame since here. It's been down, down, very small candle body down, very small candle body down, very small but up, down, down, neutral, down, 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 down. There's your one, down, down, down. And so it's gonna start to look relative value, and we've seen it now meet 2033. Let's just take all those levels off. And this was a classic case that you're getting on quite a few of the cryptos as jaws. So I mentioned also falling wedges in the jaws. This one could actually be a channel. You could draw it like that as a channel, or you could actually be drawing it as a wedge. But a couple of them, including the ridiculous meme ones like Doggy and some of the others, that's your falling wedge draw. That sets up the squeeze that generates your pop. It's a good little pop. And then of course you got the key round level at the 2000 mark. I'm going to try to choose another chart and let the eye come back on. You can see that a little bit less busy a chart. And you've got that rising wedge, and you've got that key level that you've just met. Now I want to fix that and just put these lines a tiny bit more. It's probably because I'm not on log scale, or I was on regular when I drew it. That's why it was on regular when I drew it. So let's get that a bit reframed. But that is a seminally important mark to get over for ETH. It'd be good if it can hold on to it a little bit. It fizzled there. You only had, since when was the last time you were above 2000 there? And that was date and time. I think it was 21. Get out of it. 16th of May 22, 9th of May 22. So that's over a year ago. It's about 18 months ago. And that was a sell-off of horrible. You closed that week above. You closed that week above there as well. So the 16th of May is correct. Then you were down, and but for one stab above that you immediately rebutted back below equally strongly, you've been under the 2K mark. You can see you got rejected there. This is inherently a rejection. If I do a fortnight, you'll see this only as a wick. And so it's going to be interesting to see if we can end this week or the following week, especially if we're looking at fortnightly, above a 2000 fix, because then that starts to point to a visit back up here. You could be in a rising wedge structure, and I would imagine there is a chance you could squeeze out the top. But as always with rising wedges, if we got a demand destroying event, and this is the other thing that comes out of the stream and some of the questions that people are asking, there's still a wild card out there. If we have a debt collapse and everybody's a forced seller because they have no other money, they have no notes, they have no means to meet their outgoings, what do you then do? Well, you're pretty much in trouble in terms of what you need to do, and you could have a downside break out of this falling wedge one more time. So whilst we are saying it's behaving like a bull, the Bitcoin is leading, if you had a shocker, so overall our expectation is for 2024 is that you're going to finish higher, certainly at the end of 2024 or certainly at the latest end of 25, on whatever crypto Bitcoin price is today. But you might have a very, very volatile journey. It won't be straight line. It's not going to be low volt. It might be eventful. And a demand destroying event could see a collapse. You could have social unrest for quite an extended period. And, you know, it might not be fixed by 2024. You might need 2025 before you're significantly above what you start 2024 at. But I would imagine that 2024 is going to be a good year, but it could overall, if you take where you start and where you end. I don't want to vouch for how stable the journey is going to be in light of everything that is going down. So what does that mean for you? What it means for you is leverage will kill you if you have a major dip. And I want to give you an example instead of just talking visually with my hands and you're all wondering what's he saying. The example I'm going to give you is Bitcoin in terms of the events of March 2020. And let's stay in a logarithmic sense. You truly, truly get to appreciate. We called the shooting star. This is candlesticks analysis. We said you're not going to keep going up. This is a bit of a fizzle. What did you end up getting? At one point, you traded here. From there, you were almost 14,000. You were almost 3,900. Let's just say that again. During the period of the year, from, let's just say, May to May. That's 1 year. May 19 to May 2020. You actually traded almost as high as 14,000, it was about 13.9, and you almost traded 3.9. 13.9, 3.9. 10 grand difference, but forget about the grand. Think of the percentage difference. 4 to 14. It's a lot. 3x is 12 plus 2 more. 3.5 times you have to go up if you're in at 4 before you're 14. 3.5 times percentage. So that's how much you dipped. However, you finished that year of 2020 2021 started there. You finished it at 55. High. No, it's 41,950. I adjusted. Grab that wick. You finished it at 40. You actually had a low of 4. 10x in the calendar year. So in the year May to May, you actually had to go 3.5 times just to get back to 14. Not only did you do that, you went up 10. So do you understand the nature of that journey? So if I had said to you in a year's time you'll be higher, but I can't vouch for the journey, understand what that is. that is a leveraged long murder event. It is Saw 4, the movie, the basement version. It is an absolute snuff movie in terms of your longevity. So if you understand that, you understand that it's better to be in, it's better to be flat on leverage, and it's better to have all your other duckies in a row that you're not a forced seller. Cash, self-reliance, food, power, water, the worst case scenario, zombie apocalypse. Perfect. You're going to still be in the game. Stay in the game. That's what I meant by stay in the game. And you could have another period where at some point it does that. Now, that's what it did to Bitcoin. But I want to also show you it doesn't have to be that dramatic, because things are turning now. Maybe everyone going to get Bitcoin getting more strong, debt markets very weak, more people gravitating into crypto, buying the dips. You could have a gold event for the same March 2020 event. Now gold also went down, but it was over a lot quicker. It was back where it was before a lot sooner and higher. So let's have a look at gold. It might be different. You will get that death-defying event, you will take your hit, and you'll bounce straight back up. So that is the same event that I showed you on crypto. We haven't changed the time frame, weekly. Up, smash down, everything went down. Back, flag, go, new high. What's the problem? You had to hold out a couple of months. So if we are starting to see more acceptance of money in a central bank digital currency, digital money thing way, and there's debt selling off and that side is collapsing, the old world is collapsing, you may this time get more of a gold opinion. But I want to warn you, Bitcoin is not got the same volatility criteria as gold. Gold moves 10 or 15%, it's a big move, down or up. Bitcoin moves 10 or 15%, it's small beer. So you've also got to bear in mind, you're talking about a far more volatile liquid asset, while this one is a lot more stable, but less exciting. You want the excitement, you take the volatility. So that's the best outcome for a future demand destroying event for Bitcoin. The worst is what it's already done before. And that was extremely bad. I don't think we've ever had an event like that. However, whatever comes next isn't going to be the same, but I don't think it's going to be any less big. So now you have a couple of things. So what did we cover in this video? The key levels on Bitcoin. 40.5, 42.5, 47.5, and why they key levels. The fact that you popped up, decent, but if it fizzles, you can still pull back and rest and pause for a while. The wild card of the demand destroying event is not your friend. This is a complex system world. I want to just say it's all love and roses, bull, bull, bull. But there is that wild card, and it's going to be thrown, and it could affect your journey. If you're unleveraged, you may survive even the harshest of pullbacks. And if you sit through, you'll be fine. If you've got a good trading system, you might even see it coming and be able to pop out and get back in lower down. Click the link below, book a call, be part of our community. We do regular updates on this all the time. We're not going to be 100% right, nobody is, but that is where you go. So there's a couple of technical pointers for you. I'm not going to get into link and technical analysis on this. I just wanted to follow up the live stream with those key levels on Bitcoin and the obvious point on Ethereum, and remind you of some of the other factors. If you go in too strong, that DDE is going to kick your ass. Be careful. Okay. The game is that you stay in the game, then you end up winning. Duration makes you a king. If you've been in it long enough and you've not been killed, you're a winner. It's actually a game of survival. It was like the Springboks. They never really won any of the knockout games. They just didn't get beat. Winning by 1 point is not really winning. It's just not getting beat in the rugby. And everybody else got eliminated. You just got to stay in that game. Limp home, and then you'll actually be a winner and you'll hold the gold trophy. And then it's all love and light. So the final point that I'm going to make that is really, really, really important, the caution on leverage, everything else. This point is really important. You don't want to round trip. You are not going to get out at your highest valuation of your account. It never happens, because you wouldn't know that the next day is higher anyway if you did. But if you hold 80 to 85% of your high water, high mark, this bull market, by the time of the next bear and the pullback, you will do so much better than so many people that actually round trip, keep buying a changing, turning market, and give back all their profits, and actually many times end up with less than what they started with, or only a fraction of what they started with compared to their high water mark, definitely, and even compared to what they actually started before the bull. So you're not what your current value is now, you're what you keep after the bull market is done. That's the number we're trying to get you to accept. And it's never going to be the highest number that you have at any one given moment. But if it's 80% of your very best open P&L, it's an exceptional performance. If you want to achieve that and maximize along the way with relative strength alts that are going to outperform the others, and the early runners are typically the best, the link below is what you book for a call. That is our primary raison d'etre. We know the key failings that most people do. You want to retire out on this bull market. That means you need to maximize it and you need to keep most of it. Okay, on that message, I'm going to say goodbye and thank you for watching. Thank you for sharing. Thank you for the likes, for fooling the algorithm. We like to talk a lot of truth. We get punished for it. You counter that by giving us a bit of share. It allows us to do more of these videos. Thank you very much. Bye for now.